Question 1. General liability insurance. Which of the following best describes a claims-made form in commercial general liability CGL insurance? A. It covers claims made during the policy period, regardless of when the event occurred. B. It covers claims arising from events that occurred during the policy period, regardless of when the claim is made. C. It covers claims made and reported only after the policy expiration date. D. It covers claims arising from events that occurred both before and during the policy period, regardless of when the claim is made. Answer A. It covers claims made during the policy period, regardless of when the event occurred. Explanation. A claims-made form covers claims made during the active policy period, regardless of when the covered event actually occurred, as long as the event occurred after the retroactive date. In contrast, an occurrence form covers events that happen during the policy period, even if the claim is made after the policy ends. Therefore, option A is correct. Option B describes an occurrence form, which is different from a claims-made form. Option C is incorrect because claims cannot be made after the policy expires without an extended reporting period. Option D is misleading because a claims-made form is bound by the policy period and retroactive date, not unlimited past events. Relevant law rule. Under California Insurance Code, the distinction between claims-made and occurrence policies is critical in determining which events are covered and when coverage is triggered. Question 2. Scenario-based. Workers' compensation insurance. Mr. Parker works for a construction company and sustains a work-related injury while operating heavy machinery. After seeking medical treatment, he is unable to work for 6 months. What type of benefit is Mr. Parker entitled to under California's workers' compensation laws? A. Death benefits. B. Temporary total disability benefits. C. Permanent partial disability benefits. D. Vocational rehabilitation benefits. Answer. B. Temporary total disability benefits. Explanation. Mr. Parker would be entitled to temporary total disability (TD) benefits since he is unable to work for a temporary period due to his injury, but is expected to recover. TTD benefits provide compensation during the period he cannot work, but is expected to return once recovered. Option A. Death benefits is incorrect as Mr. Parker is alive. Option C is for permanent partial disability, which applies when the worker has a permanent but partial impairment, which is not Mr. Parker's case since he is expected to fully recover. Option D applies if the worker cannot return to their previous employment and needs retraining, which is not relevant here as Mr. Parker is temporarily unable to work but will recover. Relevant law rule. California Labor Code 4653 outlines the provisions for temporary total disability benefits under the state's workers' compensation system. Question 3. Property insurance. Replacement cost. Which of the following best explains replacement cost in property insurance? A. It is the cost to replace damaged property adjusted for depreciation. B. It is the original purchase price of the damaged property. C. It is the amount required to replace damaged property without any deduction for depreciation. D. It is the actual cash value of the damaged property at the time of the loss. Answer. C. It is the amount required to replace damaged property without any deduction for depreciation. Explanation. Replacement cost refers to the amount it would take to replace or repair damaged property with similar new materials without factoring in depreciation. Option A refers to actual cash value received, which deducts depreciation from the replacement cost. Option B is incorrect because replacement cost is not based on the original purchase price, and option D describes actual cash value, not replacement cost. Relevant law rule. California Insurance Code allows for replacement cost coverage in property insurance, providing for full recovery of costs to replace or repair the property without depreciation adjustments. Question 4. Automobile insurance. Uninsured motorist coverage. In California, which of the following statements best describes the purpose of uninsured motorist coverage under a personal auto policy (PAP)? A. It covers the policyholder's liability for injuries to other drivers in an accident. B. It compensates the policyholder for damages caused by a driver who has inadequate insurance to cover the damages. C. It compensates the policyholder for bodily injury damages caused by a driver who does not have insurance. D. It provides physical damage coverage to the policyholder's vehicle in case of an accident. Answer. C. It compensates the policyholder for bodily injury damages caused by a driver who does not have insurance. Explanation. Uninsured motorist coverage in California compensates the policyholder for bodily injury damages caused by another driver who has no insurance. Option B describes underinsured motorist coverage, not coverage. Option A refers to liability coverage, which covers the policyholder's responsibility for injuries to others. Option D is incorrect because physical damage to the vehicle is covered under collision or comprehensive coverage, not Relevant law rule. California Insurance Code Section 11580.2 mandates that all auto insurance policies offer uninsured motorist coverage unless the insured rejects it in writing. Question 5. Claims handling. Investigation of claims. When investigating a property insurance claim in California, what is the insurer's primary obligation? A. To gather evidence that supports denying the claim. B. To gather evidence that supports the claimant's case. C. To conduct a fair and prompt investigation of all aspects of the claim. D. To settle the claim based on the first estimate of damages received. Answer. C. To conduct a fair and prompt investigation of all aspects of the claim. Explanation. Insurers in California are required to conduct a fair and prompt investigation of claims to ensure all relevant facts are considered before making a determination. The investigation must be impartial, and the insurer cannot simply look for ways to deny the claim, making option A incorrect. Option B is misleading because the insurer must be neutral, not advocate for the claimant. Option D is incorrect because multiple estimates or evaluations may be needed to ensure accuracy. Relevant law rule. The California Unfair Claims Settlement Practices Act, California Insurance Code Section 790.3 requires insurers to conduct fair, thorough, and prompt investigations. Question 6. Commercial property insurance. Causes of loss forms. Which of the following is true regarding the special causes of loss form in a commercial property insurance policy? A. It covers only the perils specifically named in the policy. B. It provides the broadest coverage by covering all risks except those specifically excluded. C. It covers all perils, including those that are excluded in the policy. D. It only covers fire, lightning, and explosion. Answer. B. It provides the broadest coverage by covering all risks except those specifically excluded. Explanation. The special causes of loss form provides all risk coverage, meaning that it covers all perils unless specifically excluded. This gives it broader coverage than the basic or broad forms, which only cover named perils. Option A describes a named peril policy, not the special form. Option C is incorrect because the policy specifically excludes certain risks. Option D describes a basic causes of loss form, which only covers limited perils. Relevant law rule. Commercial property policies in California often offer basic, broad, or special causes of loss forms, with the special form providing the broadest coverage under California Insurance Code standards. Question 7. Ethics and professional conduct. Fiduciary responsibilities. An insurance producer in California has fiduciary responsibilities towards their clients. Which of the following is the most accurate description of those responsibilities? A. The producer must prioritize the interests of the insurer above all else. B. The producer must disclose all material facts related to a client's insurance needs. C. The producer must guarantee the financial stability of the insurer. D. The producer must handle all client premiums as personal assets. Answer. B. The producer must disclose all material facts related to a client's insurance needs. Explanation. A producer's fiduciary responsibility includes acting in the best interests of the client, which involves disclosing all relevant information so the client can make informed decisions. Option A is incorrect because the producer must prioritize the client's interests, not the insurer's. Option C is beyond the scope of a producer's role, as they are not responsible for the insurer's financial stability. Option D is incorrect, as premiums must be handled separately from personal assets. Relevant law rule. The California Insurance Code mandates that producers act in a fiduciary capacity with respect to clients and handle premiums in accordance with state laws. Question 8. Scenario-based. Homeowners insurance. MS. Larkin has a homeowners policy, HO3, and her house was recently damaged by a fire. The damage affected the main dwelling and her detached garage. If her policy includes a $300,000 limit for coverage dwelling and $30,000 for coverage B, other structures, what will her insurance policy cover if the dwelling repair costs are $310,000 and the garage repair costs are $25,000? A. $310,000 for the dwelling and $25,000 for the garage. B. $300,000 for the dwelling and $25,000 for the garage. C. $300,000 for the dwelling and $30,000 for the garage. D. $310,000 for the dwelling and $30,000 for the garage. Answer B. $300,000 for the dwelling and $25,000 for the garage. Explanation: in this scenario, Ms. Larkin's policy will cover up to the limit for each section. The dwelling coverage A, is capped at $300,000, so even though the repair costs exceed this limit, she will only receive $300,000. For the detached garage, the policy will cover the full $25,000 as it is under the $30,000 limit for coverage B. Options A and D are incorrect because the dwelling coverage cannot exceed $300,000, and option C is incorrect because the garage repair costs were only $25,000, not $30,000. Relevant law rule: homeowners insurance policies in California have specific coverage limits for dwelling and other structures as governed by the California Insurance Code. Question 9. Risk management principles. Risk transfer. Which of the following is the best example of risk transfer in the context of property and casualty insurance? A. Retaining part of the risk by increasing the deductible. B. Buying an insurance policy to cover potential financial losses. C. Reducing the risk through safety measures. D. Avoiding the risk by not engaging in risky activities. Answer B. Buying an insurance policy to cover potential financial losses. Explanation: risk transfer occurs when the financial burden of a loss is shifted to another party, typically through the purchase of insurance. In this case, buying insurance transfers the risk from the policyholder to the insurer. Option A describes risk retention, where part of the risk is kept by the policyholder. Option C describes risk reduction, and option D describes risk avoidance, neither of which involves transferring the risk. Relevant law rule: risk management in California insurance is guided by principles that include risk transfer as a key mechanism for managing financial exposure to loss. Question 10. Personal lines insurance. Auto insurance limits. Which of the following represents the minimum liability limits required by California law for personal auto insurance policies? A. $15,000 for bodily injury per person, $30,000 per accident, and $10,000 for property damage. B. $25,000 for bodily injury per person, $50,000 per accident, and $25,000 for property damage. C. $10,000 for bodily injury per person, $20,000 per accident, and $5,000 for property damage. D. $50,000 for bodily injury per person, $100,000 per accident, and $50,000 for property damage. Answer A. $15,000 for bodily injury per person, $30,000 per accident, and $10,000 for property damage. Explanation: the state of California mandates minimum liability limits of $15,000 for bodily injury per person, $30,000 per accident for bodily injury, and $10,000 for property damage. This minimum is often referred to as the 15th taken coverage. The other options represent higher limits, but these are not the state minimums. Relevant law rule: California Vehicle Code Section 16056 outlines the minimum auto liability insurance requirements. Question 11. Commercial general liability insurance. Completed operations. Which of the following best describes the completed operations coverage in a commercial general liability CGL policy? A. It covers liability for property damage or bodily injury caused by ongoing operations. B. It covers liability for property damage or bodily injury after the contractor's work has been completed. C. It covers damage to the contractor's tools and equipment used on a job site. D. It covers professional liability related to faulty designs or recommendations. Answer B. It covers liability for property damage or bodily injury after the contractor's work has been completed. Explanation: completed operations coverage in a CGL policy provides protection for claims that arise after the contractor's work has been finished and handed over to the client. It does not cover ongoing operations. Option A, tools and equipment. Option C, or professional liability related to designs. Option D. Question 12. Workers' compensation. Benefits provided. Which of the following benefits is not typically covered by workers' compensation insurance in California? A. Medical expenses for work-related injuries. B. Temporary disability benefits. C. Punitive damages for employer negligence. D. Vocational rehabilitation services. Answer C. Punitive damages for employer negligence. Explanation: Workers' compensation insurance provides coverage for medical expenses, temporary disability benefits, and vocational rehabilitation services for employees injured at work. However, it does not cover punitive damages, which are awarded in lawsuits for employer negligence or misconduct. Question 13. Personal auto policy. Medical payments coverage. What does medical payments coverage in a personal auto policy (PAP) typically cover? A. Lost wages resulting from an auto accident. B. Medical and funeral expenses incurred by the insured or passengers. C. Damage to the insured's vehicle after an accident. D. Liability for injuries to other drivers. Answer: B. Medical and funeral expenses incurred by the insured or passengers. Explanation: medical payments coverage in a personal auto policy pays for medical and funeral expenses for the insured and passengers in the insured's vehicle regardless of fault. It does not cover lost wages (Option A), damage to the insured's vehicle (Option C), or liability for injuries to others (Option D). Question 14. Homeowners insurance. Section Roman II liability coverage. In a homeowners insurance policy, what does Section I liability coverage typically provide? A. Coverage for damage to the insured's home and personal property. B. Coverage for liability and medical payments to others injured on the insured's property. C. Coverage for loss of use if the insured's home becomes uninhabitable. D. Coverage for additional living expenses during repairs. Answer: B. Coverage for liability and medical payments to others injured on the insured's property. Explanation: Section I of a homeowner's policy provides liability coverage if someone is injured on the insured's property and for medical payments to others. It does not cover damage to the insured's property (Option A), loss of use (Option C), or additional living expenses (Option D), which are found under Section I. Question 15. Inland marine insurance. Cover property. Inland marine insurance is often used to cover which of the following? A. Commercial buildings. B. Inventory in a warehouse. C. Personal property in transit or movable items. D. Real estate property. Answer: C. Personal property in transit or movable items. Explanation: inland marine insurance is designed to cover personal property that is movable or in transit, such as equipment, fine art, or goods being shipped. It is not used to insure buildings, real estate (Option D), or inventory in a warehouse (Option B). Question 16. Business owners policy. Eligible businesses. Which of the following businesses would most likely be eligible for a business owner's policy? BOP. A large manufacturing plant. B. A small retail store. C. An oil refinery. D. A large commercial trucking company. Answer: B. A small retail store. Explanation: business owners' policies are typically designed for small to medium-sized businesses like retail stores, offices, and small service operations. Larger businesses such as manufacturing plants (Option A), oil refineries (Option C), and large trucking companies (Option D) are typically ineligible and require more specialized coverage. Question 17. Umbrella liability insurance. Purpose. What is the primary purpose of an umbrella liability insurance policy? A. To provide coverage for claims that fall under the deductible of a primary policy. B. To provide additional liability coverage above the limits of the insured's primary policies. C. To cover property damage to the insured's home or car. D. To cover gaps in personal property coverage. Answer: B. To provide additional liability coverage above the limits of the insured's primary policies. Explanation: an umbrella liability policy is designed to provide extra liability protection beyond the coverage limits of underlying policies like auto or homeowners insurance. It does not cover property damage or serve as a primary policy for claims below the deductible. Question 18. Scenario-based. Commercial auto insurance. A delivery company has a commercial auto policy with a liability limit of $1 million. One of their drivers is involved in an accident that causes $800,000 in damage to another vehicle and $300,000 in medical expenses for the driver of the other car. How much will the company's insurance policy cover? A. $1 million. B. $800,000 for property damage. C. $1.1 million. D. $500,000. Answer: A. $1 million. Explanation: the company's commercial auto policy will cover up to the policy's liability limit, which is $1 million. Since the total damages exceed this limit, $800,000 plus $300,000 equals $1.1 million. The policy will only pay $1 million, and the company may be responsible for the remaining $100,000. Question 19. Flood insurance. National Flood Insurance Program. Which of the following is true about coverage provided by the National Flood Insurance Program (NFIP)? A. It covers both flood and earthquake damage. B. It covers flood damage to buildings and contents but has coverage limits. C. It provides unlimited coverage for flood damage. D. It covers damage from burst water pipes within a home. Answer: B. It covers flood damage to buildings and contents but has coverage limits. Explanation: the NFIP provides coverage for flood damage to both buildings and personal property but has specific limits. The NFIP does not cover earthquakes (option A) or burst water pipes (option D), and its coverage is not unlimited (option C). Question 20. Commercial property insurance. Coinsurance clause. Which of the following best describes the purpose of a coinsurance clause in a commercial property insurance policy? A. To limit the insurer's payout in the event of a loss. B. To require the insured to carry a specified percentage of insurance relative to the property's value. C. To provide coverage for additional perils. D. To eliminate the need for deductibles. Answer: B. To require the insured to carry a specified percentage of insurance relative to the property's value. Explanation: a coinsurance clause in a commercial property insurance policy requires the insured to maintain coverage equal to a specified percentage of the property's value, typically 80% or 90%. If the insured fails to meet this requirement, they may receive a reduced payout in the event of a loss. Question 21. Commercial general liability. Coverage A. Coverage a commercial general liability (CGL) policy provides protection for A. Bodily injury and property damage liability. B. Medical payments to others. C. Personal and advertising injury liability. D. Damage to rented premises. Answer A. Bodily injury and property damage liability. Explanation: coverage CGL policy addresses liability for bodily injury and property damage that the insured is legally obligated to pay. Medical payments (option B) and personal advertising injury liability (option C) are covered under different sections of the CGL policy. D. Damage to rented premises. Question 22. Business interruption insurance. Coverage purpose. Business interruption insurance is primarily designed to cover A. Damage to physical property. B. Loss of income due to an insured peril temporarily halting business operations. C. Legal expenses related to liability claims. D. Increased costs of operating in a temporary location. Answer: B. Loss of income due to an insured peril temporarily halting business operations. Explanation: business interruption insurance compensates a business for lost income and ongoing expenses when operations are disrupted by an insured peril such as fire. It does not cover physical property damage (option A) or legal expenses (option C). Question 23. Auto insurance. Comprehensive coverage. Comprehensive coverage in a personal auto policy (PAP) covers A. Collision damage to the insured's vehicle. B. Liability for injuries to others. C. Theft, vandalism and damage from non-collision events. D. Medical payments for the insured and passengers. Answer: C. Theft, vandalism and damage from non-collision events. Explanation: comprehensive coverage protects the insured's vehicle from damage caused by events other than a collision, such as theft, vandalism, fire, or natural disasters. Collision damage is covered under a different section of the PAP. Question 24. Homeowners insurance. Exclusions. Which of the following is typically excluded from coverage under a standard homeowners insurance policy? A. Fire damage to the insured's home. B. Theft of personal property. C. Flood damage. D. Damage caused by a windstorm. Answer: C. Flood damage. Explanation: standard homeowners insurance policies do not cover flood damage. Coverage for floods must be purchased separately, typically through the National Flood Insurance Program (NFIP). Question 25. Workers' compensation. An exclusive remedy. The exclusive remedy doctrine in workers' compensation laws means A. An employee can sue the employer for unlimited damages. B. An employer can be sued for medical malpractice by injured employees. C. Workers' compensation benefits are the sole remedy for employees injured on the job. D. Employees can seek both workers' compensation and file civil lawsuits for additional compensation. Answer: C. Workers' compensation benefits are the sole remedy for employees injured on the job. Explanation: under the exclusive remedy doctrine, workers' compensation is the only form of compensation available to employees injured on the job, and they cannot sue their employer for additional damages in most cases. Question 26. Errors and omissions insurance. Coverage. As an omissions, EO insurance provides coverage for A. Bodily injury and property damage, B. Intentional misconduct, C. Financial loss resulting from professional negligence or mistakes, D. Product liability claims. Answer: C. Financial loss resulting from professional negligence or mistakes. Explanation: EO insurance is designed to protect professionals from liability claims related to errors, omissions, or negligence that result in financial losses for clients. It does not cover bodily injury, property damage, or intentional misconduct. Question 27. Flood insurance. Waiting period. What is the typical waiting period before a newly purchased flood insurance policy becomes effective under the National Flood Insurance Program? NFIP. A. Immediately. B. 14 days. C. 30 days. D. 60 days. Answer: C. 30 days. Explanation: the NFIP generally requires a 30-day waiting period before flood insurance coverage takes effect. This is to prevent homeowners from purchasing coverage only when a flood is imminent. Question 28. Commercial property insurance. Ordinance or law coverage. Ordinance or law coverage in a commercial property insurance policy provides protection for A. Damage caused by natural disasters, B. Losses due to newly enacted building codes requiring upgrades after a loss, C. Theft of inventory, D. Pollution-related claims. Answer: B. Losses due to newly enacted building codes requiring upgrades after a loss. Explanation: ordinance or law coverage helps cover the cost of bringing a building up to code following a covered loss, such as after fire, where new building regulations require more expensive repairs or upgrades. Question 29. Commercial auto insurance. Symbol 7. In a commercial auto insurance policy, what does Symbol 7 specifically cover? A. All owned autos. B. Specifically described autos. C. Hired and non-owned autos. D. Any auto regardless of ownership. Answer: B. Specifically described autos. Explanation: Symbol 7 in a commercial auto insurance policy applies to autos that are specifically described on the policy's declarations page. It is more restrictive than Symbol 1, any auto, or Symbol 2, owned autos. Question 30. Surety bonds. Purpose. The primary purpose of a surety bond is to A. Provide liability coverage for business operations, B. Guarantee performance or payment by one party to another, C. Insure property against physical damage, D. Cover financial losses due to fraud. Answer: B. Guarantee performance or payment by one party to another. Explanation: a surety bond is a contract in which one party, the surety, guarantees to a second party, the obligee, that a third party, the principal, will perform a specific task or fulfill an obligation, such as completing a construction project.